today's video is going to be on Schwab Dividend, SCHD, Schwab US Dividend Equity ETF. And we're going to go ahead and tell you right off the bat that we don't have much in this fund because while it's a 5-star fund on Morningstar, it doesn't pass the 10K test. There are other funds on Morningstar, 4-star funds, in fact, that made more money than Schwab D over the past 10 years. Let me prove it to you. So here's Schwab Dividend. It's mainly an equity ETF that has a balanced approach. Index name Dow Jones US Dividend Index, so it follows that. It's 5-star Morningstar, and it has holdings in it like tech and IT, and as you can see here, it has all the large cap holdings. Down here at the bottom, you see Broadcom, Verizon, Pfizer, Merck, Coca-Cola, all the safe, steady companies. It looks actually more like a defensive fund with Verizon, Pfizer, Merck, Coca-Cola. So there's staples. Lockheed's a defensive, Pepsi's a staple, Cisco's pretty much defensive. It's old tech. Or they have large dividends. IBM has 3 to 5% dividends. So does Cisco and the others. So I understand why these are the top holdings for Schwab, and I understand why people like it because Schwab is a well-known fund. But when we go do the Morningstar test, you'll see that Schwab 5-star made how much in 10 years? Well, since 2013, it went up from your investment on 10,000 went from 10 to 40. That's really good. I'm not going to even try to act like that's not good. However, we have better investments in our portfolio. You see, by the way, on Friday, on the down day in the market, we were only down 0.24%. Okay, 0.24%, whereas the rest of the market was down 1%. You see up top, Dow 0.38, NASDAQ 1.59, and S&P 1%. Okay, so we're beating the market. Yeah, we're down $1,500 on Friday, but we're up 50 grand last week. So we'll take that. I mean, let's just look at our performance and value just to make sure. And yes, we're up 29% versus the S&P is 7 and NASDAQ is 14. Okay, and on the 1 year, the S&P is down 6, NASDAQ's down 12, and we're down 10. So we're in between the S&P and the NASDAQ on a 1 year. But on a year-to-date basis, we're blowing things away. And that's because we have most of our money concentrated in these two funds up top, cornerstone funds, CLM and CRF. We have about 400 grand in those because they pay about $95,000 a year in dividends. And I've always wanted Schwab D. It's a popular fund. People write about it a lot, but I'm not going to make a video, 95,000 a year, you see. I'm not going to make a video based on a popular fund that gets views when it didn't beat the Morningstar test. So Cornerstone, again, 400 grand. We have to have our margin at 200,000 in order to get that extra income that you saw up top, 95,000 a year. So this is why we don't own Schwab D, because first of all, when you go into the Morningstar test, Schwab D made 40,000, and it's 5 stars. I get that, 5-star fund. Who wouldn't want that? But wait till you compare it to the Cornerstone funds, which are 4-star, still really good, not 5-star like Schwab D. But look what it made in 10 years. It went from 10,000 to 50,000 your investment. So it beat Schwab D by about $10,000. Plus, it has tax advantages because it has an ROC aspect, return of capital aspect, that's positive return of capital because it's accretive to the net asset value. If you don't know what those terms mean, just look them up in the dictionary. I would link it in the description below, but as my viewers are starting to find out now, I'm not trying to make videos like traditional YouTubers. I don't want to do the doom and glooms like Meet Kevin, and I don't want to do the traditional stock dividend ETFs like some of these other dividend channels just to get the views. We don't sell fear. We just buy all dips. When the market's down, we buy dips. The market averages a 7% return on average. So why would you be fearful and bearish and make people lose money in their accounts or not buy things in their accounts just because of your negative outlook on the world or because you're trying to get more views on your YouTube channel? We're all positivity here. It's pretty much tearing a page out of the Buffett book. He just buys all dips, and if his security is cheaper, well, then it's just that much more attractive to buy. So as you can see in here, we don't have any SCHWAB. And that's because the 3% dividend that it pays me does nothing to knock my margin down. That's why I don't have SCHWAB in my account. Okay, it's only a 3% dividend. And it didn't make as much money as Cornerstone. I'm sorry. So 3% quarterly, it doesn't even pay monthly. Quarterly is not good enough for margin payments. I need my margin paid monthly to knock my interest down monthly. So yes, it's an all-star ETF, SCHWAB US dividend. We covered SCHWAB the other day. That's also an all-star ETF, and it pays. It did a good job on the Morningstar test, but it still couldn't beat Cornerstone, and it still couldn't beat the yield of Cornerstone, which is 20% monthly, 21% at NAV. I don't know what Cornerstone currently is. You can go to my other videos and see more on Cornerstone. And you can just go look up a price quote on Cornerstone to see the current yield. Okay, I'll give you the yield right now. Cornerstone, it is 17% currently. So, and that's because it's had a big run up from the lows, as you can see here, a big run up from 750 to 850. So, and plus, here's another reason why I don't go into SCHWAB and I stick all my money into Cornerstone, because Cornerstone reinvests at the NAV. It drips at the NAV. So if we go look at something from this month, well, we can look at last month, 1/6, when they dripped the dividends. They dripped me at 649. The stock hasn't even reached that price. So we're up 30% on that lot, which the stock never reached because of Cornerstone's special company-sponsored drip program, which SCHWAB also doesn't have, if I'm not mistaken. Please verify if SCHWAB has a feature like that where they reinvest all dividends, not at the market price, but down below at the NAV. Cornerstone's at $9, but they reinvested me at $650, which, again, the stock price didn't even reach in the overall, in the outright market. So these are the special advantages you get with the Cornerstone funds, and RIV even has a special drip program. And so we did a video the other day on SCHWAB, but we only have 20,000 in it because it only has a 10% dividend and it doesn't have that company-sponsored drip program. Either does SCHWAB dividends. So I hope this video has been interesting. We don't sell doom and gloom. We just sell positivity. And I buy these 4-star funds that make more money than other funds that are more popular, and I'm not going to make more videos on those popular funds just for views. I'm going to show you where the money is, and the money is in the Cornerstone funds. I have to admit that SCHWAB did a pretty good job from 10 to 40K. That's pretty good, and it has a lot of defensive names which serve any portfolio during a choppy market. You know, instead of having Altria like I have here, Mo, and Citigroup, and some of these defensives like GUT, which is utilities, US SCHWAB is comprised mainly of those large cap, high quality blue chip stocks. So it has a place in everyone's fund, but I wouldn't allocate much of my money to it because it doesn't pay monthly dividends and it didn't make as much money as Cornerstone. And I have different goals because I have this margin interest, and I like to push my earnings every year because I like to make more money per month so I can live financially free. So this is why I'm in the Cornerstone funds. I hope instead of US SCHWAB, US SCHWAB has a place in your portfolio, just not in mine for the goals that we have. So I hope that maybe you can take some of the strategies from my portfolio and kind of make them yours in your portfolio, and maybe have a blend of US SCHWAB and Cornerstone. Be aware of the Cornerstone rights offerings, which I made a video on. You need to sell all shares before the rights offerings. All these closed-end funds have it, but just wanted to give you a heads up on Cornerstone. That's why the chart moves sideways, because it does rights offerings. It'll be up 30% in a year to its net asset value, but then when the rights offering comes, you must sell all shares and rebuy near the NAV prices at the bottom. That's how you play Cornerstone. That's the only reason why people don't like it, because it's not a buy and hold forever. You have to sell sometimes and take your profit and reload at the lows. But what's so bad about that? That you're supposed to do that when all funds, even US SCHWAB, when it gets to the highs, you need to sell it and rebalance it and take profits and rebuy at the lows. It's just that Cornerstone telegraphs it for you and tells you when the rights offering is coming so that you can sell out beforehand. It's a beautiful, beautiful relationship between Cornerstone and its customers. So I advise you to look into Cornerstone, but have a mix of Cornerstone and US SCHWAB. And if you're going full margin like me, you might want to have less SCHWAB, more Cornerstone, but play those rights offerings correct. Anyway, see more videos on those. I hope you like this video. Stay tuned for more. Thanks.